Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Steve Sosnick, Chief Strategist at Interactive Brokers, to discuss the September sell-off and the Wall Street adage of sell Rosh Hashana and buy Yom Kippur. Steve, it's great to see you as always. Welcome back to Trade Talks. And we have a number of adages in trading like sell in May and go away, but let's talk about September, which is historically a down month for the stock market. Is the U.S. stock market a poor performer between the two holidays that mark the start of the Jewish New Year? In other words, should you sell Rosh Hashanah and buy Yom Kippur?
Hi, Jill. Yeah, it's a moving target, part of it, because, those of you who aren't familiar, Jewish holidays follow a lunar calendar. So they're never, it's not like Thanksgiving or Christmas, where the date's always the same. Thanksgiving is always the last Thursday, and Christmas is always December 25th. So the Jewish holidays move around, but they are always sort of in the mid-September to early October period. And anyone who's been in the market for a while just sort of has a gut feeling, a spidey sense, whatever you want to call it, about that period. We've all been through some rocky times, and so it's. You can argue that it's a historical fluke. It's a seasonality fluke, but for better or worse, it is working this year. We've seen the seasonality play out first in August, which is, by the way, September is usually the worst month. August is typically the second worst month. October, which gives a lot of people the heebie-jeebies, isn't always as bad because we often tend to find the bottom in October, even if it's a rocky October. And so as a result, it just sort of happened to play out well, along with the fact that the bond market pushed stocks in a direction. And I think it just played into the seasonality and played into a whole bunch of factors that had been building. But I'd rather be lucky than good or right than good. And so the strategy worked, whether it's seasonality or anything else.
Are the volatility indices finally starting to take notice here, Steve?
Yes, it's about time. One of the things that was really perplexing me through certainly a bit of August and really into early September was that the volatility indices, and we'll talk here, VIX and VolQ, were really just stagnant. They weren't doing much. And last week, it's as though they finally woke up and started paying attention. And we saw both of them pick up about 5 points. I don't love to use percentages in terms of the volatility indexes because it can be misleading. The numbers can get huge. So that's one of the rare times where I actually think in point terms as opposed to percentage terms. But both of them finally started to pay attention. Now, you might say, okay, the markets are showing a bit more nervousness, a bit more fear. First of all, remember the volatility indices are not constructed as fear gauges specifically. I like to say that they're not fear gauges, but they play one on TV. They do effectively tell us about the level, the level of concern, the demand for volatility protection that's out there in the market, which is of course reflective of fear. But I would say we even with this recent rally that we've seen in some of these in the major volatility indices, we've flipped from complacency to sort of a more normal level of risk aversion. We're back at levels that are more historically normal for these indices, rather than depressed, which we really were quite depressed. We were not quite at the 2018 pre-Volmageddon lows in some of these indices, but we were getting there, low, in some of these very low readings. And so I think now we have a much more healthy appreciation of risk.
And Steve, you made an interesting distinction in your notes this afternoon. There's a difference between covering shorts at this point and going long is a tougher question when you want to establish a new position or add to a position. With this market, when you think about sell Rosh Hashanah and buy Yom Kippur, is it more appropriate if you're covering a short or if you're looking to establish a new position?
Well, certainly, while we're on the topic of adages that work, no one ever went broke taking a profit. And so that from that point of view, if you did short, I'm never going to tell someone not to take a profit. That's good trading discipline. On the flip side, though, is this a time to be establishing longs? It's a little murkier. I think that the stock market is paying a bit more attention to the bond markets. But they've been diverging for a while. Bond rates have been going up along with stocks, which is a fairly unusual phenomenon. but it can persist for months at a time. It does seem like the appreciation of higher rates had drifted into the market sentiment a lot more. And as I said, in terms of the volatility indices, which I do tend to watch as indicators of when we've gotten oversold, in the comments I made earlier by saying we've gone to more normal levels from complacency to normality, we're not really at the point where we're seeing that sort of abject fear that really says this is a buying opportunity. So I think it's a bit murkier right now. I think the market really does have to resolve itself, and that could take a matter of weeks or more till we work our way through some of these situations.
All right, Steve, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.